Every year, thousands of retirees legally pay more taxes than they need to, and many lose hundreds, sometimes even thousands of dollars without realizing it. Not because they owe more, not because they made a mistake, but because they're too afraid to claim medical deductions the IRS actually allows. For years, many retirees have believed that claiming certain medical expenses is the quickest way to attract unwanted attention from the IRS. So instead, they play it safe, file their taxes, and unknowingly leave their own money behind. Now here's what surprises most people. Some of the medical deductions retirees avoid the most are completely legal when claimed correctly. In fact, one of the 5 deductions we're covering today is so commonly overlooked that many retirees never realize that they've been eligible to claim it for years. So before you file your next tax return, or if you've been paying medical bills out of your own pocket, don't skip this video. By the end, you may discover that an expense you've been paying for years could actually reduce your tax bill. And make sure you stay until the end, because the final deduction is one that many retirees assume doesn't qualify, when in many cases, it actually can. Let's get started. Here's the biggest mistake many retirees make the moment they hear the words tax deduction. They think, I'd rather not risk getting on the IRS's radar. It's an understandable concern. No one wants extra paperwork. No one wants unexpected questions. No one wants to worry about making an honest mistake on their taxes. Return. So many retirees choose the safest option. If they're not completely sure an expense qualifies, they simply leave it off their return. But here's what most people never realize. Being too cautious can sometimes cost you far more than taking a legitimate deduction. Over the years, that could mean giving up hundreds, or even thousands of dollars that legally could have stayed in your pocket. The deductions we're covering today aren't secret loopholes. They aren't aggressive tax strategies, and they aren't designed to beat the IRS. They're legitimate deductions written into the tax rules, yet they're overlooked every year because many people either don't know they qualify or assume they don't. That's exactly why this list matters. We're counting down 5 commonly missed medical deductions, and as we go, you'll see that each one becomes more surprising than the last. In fact, the final deduction is one that many retirees pay for every year without ever realizing it may qualify. So don't skip ahead. One of these deductions could apply to an expense you've already paid. Let's start with a deduction that many retirees overlook because it begins before you even step into the doctor's office. Think about the last time you had a medical appointment. You probably remembered the doctor's bill, maybe the prescription too, but what about everything it took just to get there? The drive, the parking fee, a taxi or rideshare, or maybe a family member had to drive you because you couldn't. Most people pay those costs without giving them a second thought. But here's what many retirees don't realize. In certain situations, some travel expenses related to getting medical care may qualify as a tax deduction. And that's where many people unknowingly leave money on the table. They assume that if the money wasn't paid directly to a doctor, clinic, or hospital, it can't count. But that isn't always true. The key is keeping good records and understanding which travel expenses qualify under IRS rules. We'll explain those details later. For now, just remember this. Some of the money you spend simply getting to medical care may be more valuable at tax time than you ever expected. The next deduction is something millions of retirees pay for every single month, yet many never realize it could affect their taxes. Think about the last time you picked up a prescription. It probably felt like just another routine expense, month after month. The costs keep adding up. One prescription, another, refill, and before you know it, those small payments can turn into hundreds or even thousands of dollars over time. Here's what surprises many retirees once they pay for their medication. They assume that's the end of the story. But depending on your situation, some prescription-related medical expenses may count toward a taxes deduction. That's why keeping good records matters. Throwing away receipts or forgetting what you paid could mean missing money you're legally allowed to claim. And if this deduction caught you by surprise, the next one surprises even more people. Many retirees pay for it every year without ever realizing it may have something to do with lowering their tax bill. The next deduction begins with something many retirees never expect, a change to their own home. Imagine your doctor tells you that climbing the stairs has become too dangerous or that getting in and out of the bathtub is no longer safe. So you decide to make a few changes. Maybe you install a wheelchair ramp. Maybe you add grab bars in the bathroom. Or perhaps you widen a doorway to make moving around easier. Most people see these as just another expensive home improvement. They pay the bill, move on, and never think about it again. But here's where many retirees are surprised. If those changes are made because of a medical need, some of the related costs may qualify as medical expenses for tax purposes, depending on your situation. That's why it's important not to assume every expense is simply part of getting older. Sometimes the medical reason behind the change matters just as much as the change itself, and we're not done yet. The next deduction is one that many retirees pay for year after year without ever realizing it could potentially help reduce their tax bill. The next deduction hides inside a bill many retirees pay every single month without giving it a second thought. If you've spent years paying for insurance to protect your health, it probably feels like just another routine expense. You pay the bill, file it away, move on. But here's what catches many retirees by surprise. Depending on your situation and the applicable tax rules, some long-term care insurance premiums may qualify as medical expenses for tax purposes. Like many people, you may assume that because it's an insurance payment, there's no possible tax benefit. But that assumption could mean overlooking money you're legally allowed to claim. That's why it pays to understand what qualifies and to keep good records of what you've paid. And now we've reached the final deduction. It's connected to something many families rely on every single day, yet countless retirees never realize it may have tax implications. Let's take a look. We've reached the deduction that surprises more retirees than any other on this list. As we get older, many of us eventually need a little extra help at home. Maybe a nurse comes to your house. Maybe a caregiver provides medically necessary care, or perhaps you need special medical equipment to help you stay safe and healthy. Most families focus on getting the care they need, and understandably so, taxes are usually the last thing on their minds. But here's what catches many retirees off guard. Some of those medically necessary expenses may qualify as medical expenses for tax purposes, depending on your situation. That's why it's important not to assume that only hospital or doctor's office bills matter. In some cases, certain home medical care expenses may also count. The key is keeping good records and understanding what the tax rules allow. And before you think you're finished, there's one final mistake that causes many retirees to miss these deductions. Even when they may qualify for them, let's make sure you don't make it. Before you leave, there's one mistake that can wipe out every deduction we've talked about today. Even if you're eligible to claim one or more of these medical expenses, you could still miss out if you can't show what you paid. Imagine paying those medical bills throughout the year, only to lose the potential tax benefit because you don't have the records to support your claim. That's why keeping organized records is so important. Save your medical receipts, keep your pharmacy records, hold onto your insurance statements, and keep any other documents related to your healthcare expenses. Only takes a few moments to save them today, but those records could make a big difference when it's time to prepare your tax return. One final reminder. Whether a particular expense qualifies depends on your individual circumstances and the IRS rules that apply to you. If you're ever unsure, it's always wise to speak with a qualified tax professional before filing your return. If you found this video helpful, please give it a thumbs up. If you want more simple, easy to understand retirement tips that can help you avoid costly mistakes and keep more of the money you've worked so hard to earn, subscribe and turn on notifications so you don't miss our next video. A few simple habits today could save you money, reduce stress, and help you make more confident decisions when tax season comes around. Thanks for watching, and I'll see you in the next video. Before you go, think about every doctor's visit, prescription, or medical expense you've paid for over the past year. You might be surprised by how many you've forgotten or how many could deserve a closer look when it's time to prepare your tax return. Taking just a few minutes to review your records today could help you. Ask the right questions and avoid leaving money on the table. And don't stop here. The video on your screen right now reveals even more legal tax breaks and retirement strategies that many Americans overlook every year. There's a good chance it covers something that could save you money too. Click on it now, and I'll see you in the next video. Before we reveal the final 2 deductions, let me ask you something. So far, how many of these medical expenses have you recognized from your own life? 1, 2, or maybe even more? Let us know in the comments by sharing the number, but please don't include any personal or financial information. It's always interesting to see how many people realize they've been overlooking expenses they never thought could have tax implications. Now let's continue, because the next deduction is one that catches even careful retirees by surprise.